Hello, everyone, and welcome to another VIP Zoom session analysis. Today is 22nd of February, and we will discuss this week's happenings and what does it mean for the stock market and all the other markets, meaning bond market, indices, commodities, and stocks, individual stocks. First of all, let's look at the news we had this week. There wasn't really important news on Monday and Tuesday regarding especially US dollar, but on Wednesday we had FOMC meeting minutes. Let's open it. So on FOMC meeting minutes, there are two things you can open. You can open this and you can open this statement, okay? Now this minutes tells us what the committee, what is their decision, not just Powell's decision, but what was committee's decision. Now, you should definitely read it, and if you have any questions, always you can feel free to ask me. But in short, conclusion was, maybe it can be summarized in one sentence: financial conditions ease modestly but remain about as tight as they were last summer and much tighter than when the hiking cycle began. So they are telling us that these higher interest rates are pushing the economy, strangling the economy, but that still the economy is pretty much strong. Another sentence: pricing of inflation derivatives continues to suggest a near-term path of inflation consistent with the return to 2% later this year. So what they are actually telling you is that they are expecting and trying to push inflation back to 2%. Now, what did we talk about last time? All these questions, since we have also members here that are from public group, I'll start maybe from the beginning to explain you how real macroeconomic analysis is done and why you should always adjust your market expectations. So, first of all, macroeconomic analysis or trading isn't buying on the trend line. If you do that, you are most likely losing money. That's really important to understand. If we talk about macroeconomic analysis, especially in forex market, it's not the same to trade forex market and the stock market. So first of all, we ask ourselves questions. What do we usually ask ourselves? We ask ourselves, one of the question is, how strong is the economy? Okay. Now, think about yourself as a macroeconomic analyst working for some hedge fund or some investment bank, thinking about how can you analyze what is going to happen with some country's economy and some country's currency. So when we look at the economy, how strong it is, what would you look at? Who can tell me? What would you look at when analyzing the country's economy? Let's say Croatia, United States, Germany. What would you analyze? What data would you look at?
Okay, I will say.
Sure.
I would say unemployment, GDP, interest rates, maybe.
Exactly. So you look at labor market. You would look at GDP. You would look at inflation. Now, labor market, GDP, inflation, and you would also look, one of them is exports, okay? You would look at them and see how they are faring out. Let's check it out. The thing I want to look at is trading economics. Let's look at Germany. Now, Germany has an inflation rate of 2.9%. The goal is 2%. Okay, that's inflation rate. Then, if we look at the GDP, GDP in Germany is growing and was actually falling last year. So you can look at GDP from quarter to quarter or GDP year per year. So you can also say that Germany's GDP is stagnating or falling compared to the last year or last quarter. Okay, that's the second thing. The third thing is labor market. Now you go to here and you look at the labor market, labor. Let's look at the unemployment rate. unemployment rate has increased 5.8%, but in the long run, it really hasn't increased much. So, to make it shorter, what do we have? Regarding Germany, we have labor market in Germany that is strong. Okay, this same applies for the United States because they're somewhat similar, not at all the same, but for the easy argument, let's say that's somewhat similar. In Germany, GDP is stagnating, while in the United States, GDP is strong, okay, meaning growing. Inflation is around 3%. Now, exports, I will not talk about that more. Now that you know, what can you conclude about Germany economy? You have GDP falling down, which means production is falling down, and inflation that has fallen down. So we have slowing German economy. On the other hand, let's look at the United States. Let me show you something. When we look at the United States, they have positive GDP growth rate. You see this 3 and 4% quarter over quarter, annually 3.1%. Unemployment rate 3.7%, below that of Germany. Non-farm payrolls, that means how much jobs are created, if you look at it, is actually increasing. So, talking about United States, this is the strongest economy in the world. We can conclude for the USA that this is a very strong economy. Now that you know, as a macroeconomist, what is happening with country, you ask yourself further questions. These further questions are monetary policy. What will Fed do? Meaning central bank for the United States. Now, let me ask you guys this question. You have strong economy. You have labor market data that is going strong. That means people are getting jobs, which means they're spending more. Their wages are going higher. GDP and production is going higher. Inflation is around 3.3%, has increased compared to the last time. What would you as Federal Reserve do? Would you increase the interest rate, or would you reduce them, or would you stay the same? First question, here's first question. Would you reduce interest rate in the next meeting, which is March?
Definitely no.
Exactly. Correct. You have strong labor market, you have everything that is strong, that is pushing inflation higher. Why would you reduce the interest rate? So in the short term, Fed will not reduce interest rate. And that plays to our momentum trading or sentiment, bullish dollar. But
Okay.
what does the market ask itself currently? The market asks itself, right? What does it mean? When will first interest rate reduction come? That is the question.
Yeah, can I just then ask a question?
Sure, no problem.
I mean, I know that, but for people who don't know, why, for example, when interest rates goes up, why that currency getting stronger?
Because as interest rate increases, that means the money you are holding in your banks is yielding bigger interest rate, meaning if you have $1,000 in 1 year, you will have $1,100 instead of $150. $1,050. So the process is that higher interest rate, it increased the costs of credit, means the credits in the economy has higher interest rate, which is slowing the economy down. On the other hand, If you have a lot of money in the bank, that means you will get higher interest rate on your deposits than if there is lower interest rate. That's the main reason.
Okay, but maybe we have now situation, correct me if I'm wrong, that we had higher interest rates in US, but US economy is still stronger. But usually US economy should, slow down a little bit.
Yes. Okay. What's the question?
That was the question.
Well, you can argue with it the two ways. While higher interest rates are reducing the production in the economy, it looks like the US economy is doing very fine on these higher interest rates at the moment. You see? Why is that? That might happen because of productivity. Let's say AI was the new deal, new sector in the economy, and it is reducing the costs of production than it was 10 years ago, for example. So economy is really dynamic market. And that's why when I talk to you about market index future movement, we more rely on technical analysis combined with fundamentals. So when higher interest rates are produced, that does not mean that initially the economy will go into recession in the next 3 months. Usually it takes time for these higher interest rates to circulate within the economy and then to make their damage. Because think about it. Let's say you are a car manufacturer in the United States. You got your credits from banks 5 years ago where interest rate was 0.5%. But now, if you want to get a new credit, new loan, your interest rate will be 5-6%. And that is the problem. New credits will be less. The amount of newer credits will be less. And the question is, can the economy stand? And you look at this through CPI, core CPI, labor market data, average hourly earnings, PMIs, and you see how the economy is faring out. We will likely have a recession since we had yield curve inversion. I talked about that several seminars ago. I don't remember. But yield curve inversion is the difference between 10 and 2-year treasury yield. Now we had this inversion which lasts long, and usually when this inversion ends, this is when this inversion ends, this is usually when recessions start. We had yield curve inversion over here, and then yield curve normalized, and then recession started. We had yield curve inversion over here, small one, and then recession later started. We had yield curve inversion over here, and then afterwards recession started. So it is not 100% safe signal, but look at this yield curve inversion compared to these ones, right? So we might expect a recession, but that will be seen in the data. For now, we are playing longs on the stock market. Did I help you answer the question?
Yes, thank you.
Now, what the markets ask themselves, when will the first interest rate come? Fed said there will be 3 in this year. Okay? And this is what I'm playing an understanding of, because at the moment I will also hold higher interest rates. But if I see deflationary data in the labor market, in CPI through time, then I would reduce the interest rate. I would do the same as Powell. I would maybe have 4 interest rate reductions, but we will see regarding data. So currently, we're looking at the data and predicting what the Federal Reserve will do. The most important data are CPI and core PCE. Even PPI is important. So as of now, I am currently bearish on macroeconomic view on US dollar and looking to short the US dollar. That's why I actually took some small profits on GBP US dollar today. You saw that. Now, to predict exactly what will happen, it is not possible at the current macroeconomic environment. If we see further pro-inflationary data, CPI coming even higher, that means that inflation has starting to heat up again. That will actually play out. The Fed might even increase do one more rate hike. But for now, I am looking for shorts on US dollar and playing the strength on everything against the US dollar. The other question, yes.
So if Fed, let's say, increase interest rates, that means that gold will, that US dollar will fly up again.
Yes, exactly.
And gold will go down. Yeah.
Exactly.
I mean, I know that. So but for people who don't know, who are here for the
Okay.
first time.
Okay. Sure. Feel free to add anything you want. Now, regarding fiscal policy, that means what will government do? That has a lot of effect on bond prices, but I will not go into much detail on that because most of you don't understand fiscal policy and bond prices. Now, further discussing, now that we have concluded that Fed is most likely going to reduce the interest rate 3 times this year, we have conclusion. Dollar will weaken and we're going to short the dollar. Now, what does that tell us? That tells us that we are going to play our market sentiment on weakness, macroeconomic sentiment, sentiment is a different word. Macroeconomic positioning trading, swing trading, as shorting the US dollar. And that's exactly what I'm doing, right? I'm shorting the US dollar. There are two possibilities. One of these is a short an area of around here. Another one is this higher. So we know that we are looking for longs in the forex markets on euro US dollar, British pound US dollar, and shorts on US dollar Japanese yen. Now, euro US dollar and GBP US dollar are a stronger trade than it is to short US dollar against Japanese yen. On the other hand, we are looking for longs on British pound against Japanese yen and euro against Japanese yen, long-term macroeconomic longs. And this, guys, has been playing out constantly. This was one of the best trades so far that we have predicted since the inception of the VIP group. I think it was a year ago, something around that. I think the inception of VIP group started a year ago, and this actually has gone, let me check out, around 3,000-4,000 pips. So it will continue to go higher as probably up until this resistance area. And then this will be probably a good short opportunity. Of course, we will be watching what will Bank of Japan do and what will Bank of England. Now, just as I have analyzed the US economy for you, the same applies for British economy and Japanese economy. When we analyze the monetary policies of the United Kingdom and of the Japan, we know that they are actually the opposite direction. That's why this is long, because Japanese central bank is producing more Japanese yen, which makes it worth less, because when there is more of something, it is worth less. And on the other hand, British pound and euro are their central banks in the United Kingdom and in Europe are more of a hawkish stance, meaning they're restrictive. There is restrictive monetary policy in these countries, which means these currencies are strengthening. So this is just playing out as we have predicted. Regarding bond markets, I'm playing longs on 2-year government bonds and shorts on 10-year. I will not go much into detail about it. Now, regarding indices, we are long on all stock market indices. As you have seen, US economy is pretty strong. So one should look at longs on the S&P 500, longs at the US 30, longs and NASDAQ, and it has actually played out. We also suggested entering S&P 500 when this was at its low over here. Now think about it. You could catch this move higher. It all stems from understanding macroeconomics and understanding monetary fiscal policy and combining it with technical analysis. Okay? So we are continuing to look for longs on the stock markets. This Hang Seng index is still in a downtrend, but looks promising for finding its long-term uptrend. In short, looking for longs on all stock market indices. Then, regarding commodities, we hold swing longs on gold. Okay, I already explained you that, because if the dollar is weakening, then gold is strengthening. Usually gold is the opposite of the US dollar. So all I'm doing is actually expecting my longs to play out on gold prices due to the analysis I just gave you on the US economy and on fiscal and monetary policy, what the Federal Reserve is going to do. So I am staying with my bullish bias on gold. And it actually has played out. This support over here, this was actually this one, I'll show you this one here, was a trade suggested by Maras to enter long. So actually this played out. So if we look at the analysis, we were correct. If you have long term here, once your stop loss should now already be at break even because you have already made some good profits. And you should also take some small partials. Now it depends on your trading psychology. So we are looking for longs on gold, okay? If we're talking about how you do the analysis, if I'm talking about macroeconomic analysis, this is how I usually trade. I look at where is the market going. I know, first of all, I do fundamental analysis, looking what is happening with US economy, what is happening with US dollar, what is happening around the world, because gold is a safe haven. Do we have another war starting out, right? Our current forex priced in. It's all important for you to understand where the price of something is going. And then I look at, and after all this, I look at technical levels. Okay, which technical levels should be broken for gold to continue higher? I see a trend line, for example, over here. I see higher low, higher low, higher low. This looks like a breakout. This is on weekly charts. Why weekly? Because I'm looking for long-term trades. I want to hold them maybe even few months, not few days, okay? I might take some small profits, but I'm looking to hold this trade longer. Then I go to the lower time frame and try to find my perfect support areas where I would also consider buying on a daily time frame. And then there is one indicator I usually use. It's called a pivot point. I usually use it on weekly or monthly time frame. And then I even combine it with the pivot. Also, I draw Fibonacci, for example. This was a movement. And then if I see, for example, that price is around my pivot point, it's around some Fibonacci number, and it's also on support area, like area over here, then I would be entering long into this position. So I usually don't use only classical support or resistance. I combine it with Fibonacci and I combine it with indicator called pivot points. So gold longs, okay? So where would I be a long gold buyer? Probably at an area of 1936 and at an area, even though this already played out, of 1980s. This is where I would be a buyer. Also, if price breaks out and then does a retest of the area around 1977, 2077 or 2080. Okay, let's do also quick analysis for British pound against US dollar. This longs, when we did the VIP Zoom session, were suggested that these are good entries. I was then in skiing in Italy, but nonetheless, we suggested this, that I was more bullish, Mars, if you remember. My fundamental analysis were bullish on GJ. You were actually technically bearish, but it looked like I was right.
Yeah. Just let's make one thing clear, because you said that you are bullish on gold, but you said that you will be looking for buys around 1930. Okay,
Yeah.
that still does not mean the price cannot go lower, but over the longer term, price of gold should go up. And then a lot of people are actually confused why you think the gold is bullish, but you are shorting on a daily time on the intraday trading live on 30-minute time frame. You are shorting gold. Are you fundamentally bullish?
Yes, that's the reason, because fundamental analysis is a long-term analysis concerning future weekly and monthly movements, not intraday movement, okay? Not movement within 1 hour or 30 minutes. If you're using trading 1 hour and 30 minutes, you need to understand the market sentiment, okay? It's important because the latest news will affect the price movement mostly, right? And then these are just setups from long-term macroeconomic entries. If you're intraday trading or day trading, which I must warn you, has a high level of failure within traders, then you should read news, understand the big picture, and then trade mostly in the direction of market news. Just like today, I predicted that unemployment claims will be lower than expected. Why? Because the labor market was strong for the last few weeks and for the maybe last few months of the data. So one could expect that labor market will come out strong as well, meaning unemployment claims came below expectations. And that is how Maras actually played out his trade today, making nice profit. So you can short gold intraday, but long term you should look for gold for long. Just like GBP Japanese yen, you can short it intraday, but I would like it to fall because I would like to find better entries. And if I'm talking about British pound against Japanese yen, these are the entries I would be willing to buy. This would be daily entry. This would be more weekly entry, even though we have, as it seems, breaking out of this range and continuing to move higher. And this is how I approach the markets, right? One, if you're a shorter term trader, you can also use this support for your entries, right? You can also use this support for your entries. You can draw Fibonacci number. You see the price here was in a range, but the price broke out, retested it. So you already had one great entry over here. Now your stop loss should be already break even. But what's the difference between us and all other, let's call them gurus? All these gurus tell you there is a special order block around, let's say over here, and now the price is gonna come back to this order block and then go higher. Look, investment banks, hedge funds, they don't trade that way. They don't look at the trend line and say, because this trend line goes above, I'm gonna buy. They understand their economics, they understand their fundamentals, and that's why they enter on long-term fundamental view. They usually even don't day trade. They enter on monthly time frames, on weekly time frames, because if you have $3 billion of money in management, how can you play with that money day trading? You can't, right? And that's why they are long-term traders. And that's why in the long run, we know GJ has gone up and will go up. And that is what is our advantage. We know where price is going to go, and then we use technical analysis to find our entries. Now, GJ and Euro Japanese yen were explained. Indices were explained looking for longs. Commodities, longs, gold explained. Orange juice and coffee. Now, Chris asked me to explain how did I predict orange juice prices, and how did I predict the price of coffee. Now, regarding orange juice, this was a future, so this is no longer valid. We need CFD now because this is going to expire, futures contract. Regarding orange juice, Chris, I usually go at and look at the commitments of traders at bar chart. Let's look at the orange juice. I will give you just an example of orange juice because the coffee wasn't the best entry, but orange juice was a perfect entry because that was expected. Now, you can see clearly that this is technically an uptrend. In an uptrend, even if you don't know nothing about orange juice, think about it. There are hedge funds in the market that move the price of orange juice, but there are also producers that they call themselves commercials, or the literature calls them commercials. And these commercials are represented by red line over here. You see? These are commercials. The green line are big speculators like hedge funds, investment banks. The blue line is presented by small speculators like you, me, and small hedge funds. I think that are lower than $5 or $10 million. So these are not important. You can see that the big speculators and commercials are usually on the opposite direction. What you want to do when we're talking about commitments of traders, if you're trading commodities, for example, you want to be buying in an uptrend when commercials are buying. Why? You can't know everything about orange juice, so you position yourself with the producers of orange juice, and their positions are showed every Friday by commitments of trading. And I knew and I saw that commercials all this time as orange juice was going up, what did commercials do? They continued buying. As this moves from low to high, that means that they are buying. While investment banks were actually selling. As commercials are the smartest players because they understand their industry. They understand every detail of it, just like you understand every part of your job, for example. So they tell us what they are doing, and they are telling us, hey, we are buying. And that's why I use this technically as a retracement before I entered further longs. And now commercials are probably at the top of buying. So it wouldn't be impossible to see start of a downtrend. But for now, commercials are buying, and we are not making any philosophy. We are positioning ourselves with what the biggest producers are doing. If commercials are buying companies that produce orange juice, mostly in Brazil and Florida, then we are buying as well. We are not being smart asses. We are positioning ourselves with the biggest producers, and that's why we caught this long-term trade. Now let me show you coffee. Why coffee wasn't such a great trade, even though we are still in profits on coffee. Where is coffee? Here it is. Looking at the coffee, this has started to go into range, and in coffee markets, commercials are selling. You see, the producer commercials are producers of coffee. Now, this is the reason I entered short, because I did not have trend. That is the reason why I actually told you that coffee isn't as good trade as orange juice, because this is choppy market right now. You see, this is kind of a range movement, right? But what I did saw that coffee is being sold by commercials, and that as it is being sold, that's why I entered short on coffee. And this is the explanation from first Chris's question about commitments of traders and how does it work. Continue further. Orange juice coffee. We have shorts on US oil, but this is a really small trade for me because there is no trend currently in the oil market. That's why I actually entered shorts, and also the retail traders were opposite of me longs. So I just risked a little. So I will not write this position over here. Regarding stocks, we are long on Autodesk, Brown and Brown, Wells Fargo. Now, I already explained you that S&P is composed of several sectors. These sectors are shown here. Let me show you just a second. These are sectors XL. Here they are. Real estate sector, right? You have communication services sector. You have financial sector. Now, if you look at technical chart of financial sector, you can see that they broke resistance areas. This was perfect support, then became resistance. And as it broke out, I was looking for fundamentally best stocks from financial sector. One of them was Brown and Brown. Wells Fargo was another. And let's now check them out. Where is Brown and Brown? Let me find it. Here's Wells Fargo. Wells Fargo has broken up. You can reduce the first, I think the stop loss was higher. Now you can put your stop loss here, or you can put your stop loss to break even. This trade is for now playing perfectly. Consider taking some partials for profits. On the other hand, Brown and Brown, I bought it as it broke all-time high. You have to have guts, and you have to understand your knowledge of history of best traders, of best traders in the history in the 20th century, even in the 19th century, how bubbles are made to find these entries. and this entry's longs were played out. I took some partial profits today for around 8 or 900 pips. Okay, so this is playing out perfectly. On the other hand, we also have longs from on Autodesk. Let me find Autodesk. Broke out, small retracement. I expect further continuation because the sector in which Autodesk is also going higher, just like financial sector is going higher. Same as I think Autodesk is in not communication services, but the other one I can't remember the name right now. But it is going. The sector is going higher, just like the stock is going higher. And the last one I should add is SMLR, which is, if you look at technically how it was, I will explain you. Long healthcare is written here. Now let's look at the healthcare sector. What is happening with the healthcare sector? Let's find it. Healthcare sector has broken to all-time highs. As healthcare sector has broken to all-time highs, what will happen with stocks from healthcare sector? Stocks from healthcare sector will go higher. Hence my entry on SMLR. Now, if you look at it technically, I entered too early, right? I should have entered this on this support where price actually rejected with stop loss at an area of over here where the price currently is. But I mean, I entered a bit early. I shouldn't have, but this was psychological Maras FOMO, fear of missing out. So I actually did enter at that position. So I'm holding a bit higher, but we'll see what will happen with the stock. And now let me add this to my analysis.
Okay, now I think we have a couple of questions in
Sure,
chat.
I will ask them. Just let me add this. I also have questions for Chris. I have to answer. I answered one of them. Okay, let's check out the questions. It's weird on that movie, but he believed what he's gonna be happening. Like he was finding deep something wrong with his housing. That yeah. You were talking about the guy who Maras talked about. Yeah, I mean he didn't come. It is what it is. I mean he is wrong if you look at this analysis. But I think if you come and you have other point of view, you can always share it and actually learn more. So people are
Yeah,
people.
can you just say I don't know is that correct, but about monetary fiscal policy, the Fed simply cannot rate cuts because of that in Europe. I mean, first time I hear that euro has to do with something with that. Is that the truth
Uh
or?
no, no, it's not true, but you can consider it this way. In 1990s, when Fed increased interest rates, Mexico went bankrupt. Because he said reduce interest rate, that's why I see he does not understand what he's talking about. Because what one can explain, that everything in economy is connected. When one country reduces interest rates, their bonds are actually less attractive, and bonds from other countries are more attractive. But bond prices are also affected by how much does country produce of them. What is the production within a country of bonds, meaning how much does country go into debt. So actually, if Fed reduces the interest rates, that does not mean that Europe will go bust. That does not mean at all. That just means that Fed will stimulate its economy, right? While Europe didn't do that. So what would you actually have happened is euro against US dollar would further strengthen, US dollar would weaken, US economy would probably go into overheating territory if it continues to do so, right? Push the inflation higher, and then you have a problem. While Europe would not have these problems. If you even reduce the interest rate in the United States, that means that there is a bigger buying power of its companies and citizens, which could actually tell you that Europe could export more of their goods into the US. But I have really found really uh, uh, I actually haven't found anyone in these public groups, especially Telegram groups, where there are no economists that can actually discuss something that complex. But I always like to hear some other opinion, not because I need it, but actually to, if I see this other person has a lot of interest in learning, then this is the type of guy I want to be with. I want to see him in my VIP group because this is somebody who will listen or read something that I tell him to read, and through time will become better. That's why I was hoping that guy will come, is to actually affect him so he can be a better economist in the future. But it is what it is. And another one for you, for the guys to say about this. Just a second, Alfano wrote something else. Yeah, Alfano, I just answered that question. Maras asked it. Bart, what do you think about American election will affect the market for us? So usually when there is an election year, expansion, not expansion, but usually the market grows in the last 2 years or last year of the presidential cycle. Usually, presidents have interest for economy doing well because they will get reelected. So usually, last year of the election cycle is bullish for the stock market, and usually the first 2 years after the election cycle, sorry for, is bearish. So these are something just historical data, but of course you can't only use that as your investment or trading guide. You need to combine it with fiscal monetary policy and so on. Let's say you have Trump re-elected as a president and China invades Taiwan. Stock market will go down. So you always need to put everything that is happening into the broader picture. Now, looking at the further questions from Chris. One of the questions was, if you could go a bit more into depth, how do you utilize the commitment of traders charts? Now, this was answered. Another question from Chris was, could you kindly cover your research analysis process when looking for trade opportunities? Would love to see your step-by-step methodology. I think, Chris, this was also covered in the first 20 minutes of the VIP Zoom session, but also as I have done it here, I invite you to look at the old VIP Zoom meetings, mostly from the beginning in the VIP group, where I do explain GJ movement when it was 4,000 pips lower, where I predict to go higher. I do an in-depth analysis of monetary policy of Bank of Japan and Bank of England. Maybe these seminars, I think it's even the first seminar in the VIP group, they will help you a lot to see how I actually do my analysis, and also you can see a little bit shorter version on this live session we did today. And lastly, if you have the time, could you look into Alibaba, New York Stock Exchange or Chinese company, long-term play? Now, let's look at the Alibaba. First of all, you have to ask yourself what is happening with China as an economy. You need to read about it. So China as an economy is actually not doing that great. I mean, it's doing okay, but it is not doing that great in the sense of that it is not beating analysts' expectations. Now that you know that is happening, they are not beating analyst expectations. Now, as I did the analysis at the beginning for the US and German economy, you ask yourself, what will fiscal authorities do, meaning Chinese Communist Party, and then monetary policy do with Chinese economy? And then you will, if you read more about it, you will find articles explaining that Chinese central bank has reduced the interest rate. The fiscal policy and fiscal agents, let's call them, have started stimulating the economy, pushing back all the sectors within the China. So now you have conclusion number one. Monetary and fiscal authorities in China are doing a lot to push the stock market and the economy back up higher again. And then after that, you see what is actually happening with Hang Seng Index, for example. Now, Hang Seng Index has made a double bottom and is currently still technically in a downtrend. So you should not, if you're looking for longs, just like I did over here, it is not a smart trade because you're actually catching a falling knife. Okay, so you can try your longs, but with small risks. What you want to see is market doing something like this. I know where I can draw. You maybe know, Maris, where there is a drawer.
Where is what?
Where you can use to draw. You know what I mean.
Just give me a second.
Brush. Here it is. I found it.
Yeah.
Now, what you want to do with Chinese index is doing something like this, doing in a range, and then breaking higher and then going higher again. And when this happens, you know the Chinese market is in an uptrend. Then you look at Baba stock, and then you say, okay, now I'm looking for longs at Alibaba. Now, this is as a trade. Looking Alibaba as a long-term investment, I still wouldn't touch it if the S&P 500, or sorry, if the Hang Seng Index isn't going higher. Looking at it from financial perspective, looking at annual income statements, you see that Alibaba has a strong growth. Just last year wasn't that growth. You have a strong company which is growing with net income, meaning profitability that is going higher. Okay. Then you look at this is the income statement. Income statement shows you how profitable a company usually is. Total revenue means if you sell your usual merchandise, let's say you have a bookstore, how many books you sell and what is the price of a certain book. Total revenue is how much money you got from these books. Net income is after you have paid suppliers of your books, rent for your store, electricity, and your employees. Net is what you have left. And this net income has actually first grown, then fell down, and then grew again. And then if we're going to go into detail, you look at cash flow from operating activities, investing activities, and financing activities to see what the company is doing with their money. I will not go too much into details because that would be another seminar. Just this one would be another seminar of 2 hours. And I still wouldn't be able to cover it all. Balance sheet tells you, okay, what does this company have and how much is this company into debt? For example, balance sheet of one person could be he owns a car and apartment, but his debt is that he actually got a credit from a bank for that apartment, right? So these are assets and liabilities usually in the balance sheet. This could also be a seminar of 2 hours, even longer. So in conclusion, Alibaba is a profitable company which is doing pretty fine as an investment, but you should be aware, if you're looking at it as an investment, that it has its risks because of the geopolitical risk regarding China currently in connection with Russia. And also, technically, Hang Seng Index is still in a downtrend. So I would not buy Alibaba at the moment, but I would wait for it, and we will wait for it, and we'll find as a trade positioning long entries when that time comes. I think I answered all Chris's questions. We have another question. Can you explain about NVIDIA earnings when you say on the VIP? Let's look at NVIDIA.
Yeah, you can explain the video shortly because next Afana is VIP Zoom meeting, and you can explain that next time.
Now, Alfano, NVIDIA is going. Look at the revenue. 6 to 26. Net income 1 to 4. 4. Cash flow. This is a company that is destroying the market. They're becoming the leader in the AI. So the same analysis stands for just like we had previous. Look at total revenue, net income, look at cash flow statements, and you will see that it will probably continue to go higher. And you could technically actually find perfect entries for longs on NVIDIA if you know how to trade stocks. Okay, guys, I will stop recording. So if you have any questions, you can feel free to ask them after.